Here are 3 companies that you probably didn't know had stocks in the stock market. Or maybe you did, I don't know. What is going on, guys? My name is Darren Jackson. Welcome back to the channel. If you're new, officially welcome to the channel. And did you know that there are over 3,000 stocks available in the stock market today? I mean, that's a lot of stocks. That's a lot of research going into a lot of stocks before you finally pick them to be added to your stock portfolio. And every day it seems like we're finding something new. But occasionally I find some stocks that I would have just never guessed were going to be in the stock market. Like, why would this company have their stock in the stock market? I mean, obviously capital gains and stuff like that, but it's still a surprise because I rarely hear about them. So in this video, I want to go over 3 stocks that I for sure didn't know were in the stock market, and you guys probably didn't either. It's always fun to learn, so let's get started. The first stock that you probably didn't know was in the stock market is Nintendo. Yes, the popular Nintendo, the Japanese-based gaming company and gaming manufacturing company. It's actually one of the things I like about the company. Not only do they develop the games themselves, but they manufacture the consoles as well. So that's kind of cool. They have brought some of the most popular games of all time, such as Mario, Animal Crossing, Legend of Zelda, and Pokemon, and some of the most popular gaming consoles as well, such as the Game Boy, Super Nintendo, Nintendo 64, Nintendo Wii, Nintendo 3DS, and most recently the Switch. So for the past 5 years, this company has been consistently growing in stock price, which makes sense because it is probably the most family-friendly gaming company ever. And it also makes sense on why that reason is why it's been benefiting from this recent pandemic. In the first half of this year, Nintendo has had profits that have been 3 times higher than those of last year, and it's expecting the revenue to increase by 7% for the remainder of the year and their net profits to increase by 16%. The majority of those increases are based off the amount of units of Nintendo Switches they sell, along with their new Animal Crossing game that recently just came out. Overall, the metrics of the stock aren't too bad. I know it's pretty subjective to say this stock price isn't too expensive. Then again, we have fractional shares. The dividend yield is pretty steady. You're looking at about $1 per year, or a little over $1 per year, but it pays semi-annually. Based off the payout history, it looks like it pays maybe 30 cents at the end of the year, and in July it pays about 93 cents, so a little over $1. But what is really nice is that the PE ratio is at about 17 right now, which basically says that this price is undervalued. Granted, this is not the only metric you want to look for when determining the value of a stock, but it does give you a little bit of headway into if you should buy this stock, and if you are you actually saving money, or are you spending too much money in comparison to its real market value? So Nintendo may be a good stock to buy. The second stock that you probably didn't know was in the stock market that you can invest in is Tinder. Kinda. So Tinder is probably the most popular dating app right now, and it is owned by another dating app called Match. Match not only owns Tinder, but it also owns OkCupid, and it also owns Hinge. Now, I'm personally a big proponent on dating apps. I feel like, especially during these times, it's beneficial for people that want to get out there and meet new people without actually having to get out there and meet new people. They can use apps such as Tinder. Lately, Tinder has been thriving. Just like Nintendo, well, not exactly like Nintendo, but just like Nintendo, it's been thriving during these pandemic times. So in the past quarter, they added over 400,000 subscribers to the already millions of subscribers they've already had, which has helped increase their revenue by 15% this year in comparison to last year. Now, those current numbers for this year look great, but this company has been growing for a long period of time. Over the past 5 years since its IPO into the stock market, it has grown over 800%. 800%. That's crazy. Like, me imagining it myself, I normally invest $50 a week. Had I known about the stock when it IPO'd, saying that I was actually investing at that time, and I invested $50 into that stock, that would have bought me over 4 shares of that stock. And had I held on it up until now, I would have made over $422. So if that's not a testament to long-term growth investing, then, I don't know what is. But as far as the stock goes itself, the one thing that does kind of turn me off is that it doesn't pay dividends, which isn't the most important thing, but again, I describe it as the icing on the cake, and I often look for the icing on the cake, even though the growth is more important. But if you use metrics like the PE ratio to determine how much you think this company is going to grow, you may not be satisfied with this. The PE ratio, last time I checked, was at about 68, which means it could potentially be overvalued in comparison to the price that you would be buying it at. But just based off the history of dating apps, online dating apps even, if you really believe in what dating apps can do and how accessible they are, especially during times like this, and how accessible they've been prior, then It takes a believer to invest into a company like this, in my opinion. The final company that you probably didn't know was a stock you can invest in the stock market is Samsung, Apple's best friend. Well, kinda. Well, kinda as in it's kinda Apple's best friend, but more so kinda as in you can kinda invest into it. So I mentioned this in the video before. It's an ETF called the EWY, which is the ticker symbol for the iShares MSCI South Korea Fund. It's basically an ETF that tracks the large market cap stocks in the Korean stock market. Now, aside from the appliances and the televisions, Samsung is known for bringing out some of the greatest phones ever. Definitely always a competitor with Apple. I love Samsung, as you guys already know, even though honestly that new Apple phone, it looks nice. So with this ETF, EWY, its biggest sector is technology, and the biggest stock within that sector, as a matter of fact, the biggest stock within the entire ETF is Samsung at about 22% of the entire stock. So for every dollar you put into that ETF, you're getting about 22% of it going into Samsung. So I do go into more detail if it's beneficial to invest in EWY for the primary purpose of investing into Samsung, since it's currently not available in the New York Stock Exchange. So make sure you guys check that out when you can. But overall, it's definitely beneficial to invest in this ETF, let alone any ETF, because it's diversifying your portfolios and you have an opportunity to invest in Samsung. So definitely could consider that. But guys, those are just 3 stocks out there that I personally didn't know that you could invest in into the stock market. Maybe you didn't know either, but definitely leave your comments below on stocks that you recently invested in that you had no idea, like they just completely surprised you when you found out they were in the stock market. Maybe you're not invested to them yet, but you're looking forward to, so definitely leave your comments below and let me know if you've actually heard of any of those 3 stocks that I mentioned today. I hope you guys enjoyed this video, and make sure you watch some of these other videos. Hopefully they help you out in your investing journey as they have in mine. I appreciate you guys watching, and until next time, take care.